Hello friends, welcome to our channel Share की तबीयत Pull and Bear. Friends, now we are discussing about the Escort Limited shares. Friends, the introduction about the Escort Limited is that it is an Indian multinational conglomerate. What is meant by conglomerate? The conglomerate is a multi-industry company, that is mean the multiple business entities operating different entities under one corporate group, that is different subsidiaries are handled by one corporate group within different industry is called as conglomerate. So Escort Limited is a one type of an Indian multinational conglomerate, and it is also an automotive engineering company also. That means it design, develop, manufacture, marketing and selling motor vehicles. It is the world largest industries. Automotive engineering is the world largest industries by revenue. So the revenue are growing rapidly. Second thing is that it operates in agricultural machinery, construction machinery, material handling and railway equipment, marketing operations, etc. It also operates in 40 countries. Its headquarters is situated in Faridabad, Haryana. Its founder member is Har Prasad Nanda. Its current CEO is Deepankar Ghosh. There are 5 subsidiaries under Escort Limited. One is Escort Construction Equipment, Escort Crop Solution Limited, Adico Escort Agri Equipment, and Escort Technology Limited, and Escorts Automotive Limited. So we can say that it is an conglomerate. Some insight relating to the Escort Limited. Friends, Escort Limited has in, it increases the employee costs in March 31, 2020 at 8.96% towards their operating revenue. Also, the interest expenses is less than 1% of its operating revenue. So we can say that it's a debt free company. Second thing is that the S investors Rakesh Jhunjhunwala also held a shares in the Escort Limited. Entire country is going under the severe impact of COVID second wave, and it also impacted the the Escort Limited also, which will be affect the core customer base of Escort Limited. Second thing is that the rural economy remains healthy. The government push to increase farmer incomes and also there is a estimate of the good monsoon rain forecast, which helps to improve the demand relating to agricultural product like tractor and other agricultural equipment. The Escort Limited is a tractor maker also. Escort Limited is focusing overseas growth uh, to export some tractors to outside India. Escort JV with Japan's Kubota company, and is looking 55% growth in export in 21-22 financial year. Europe is also open their economy after the COVID. Now, so the growth, it helps to grow Escort to grow their drivers. It also diversify their market to enter into a Southern Asia and Brazil. Now we are focused on the financials of the ESCORT Limited. Friends, now we are focusing on quarterly result of ESCORT Limited. We compared the previous quarter with current quarter. In March 2021, that current quarter, the sales has been improvised 8.35%. That is, in December 2021, it should be 2042 crore rupees to 2228 crore rupees. Now the other income decreases 14.58% from quarter to quarter basis. The total income the total income has been increases 7.93% uh, in from December 2021 it should be 2090, and from March 21 it should be 2270 rupees. Now the total expenses has also improvised 10.70% quarter to quarter basis. So income is increases 7.93% and total expenses is increases 10.70%, which shows that the EBIT should be decreases 6.50%. That is, in December 2021 it should be 379 crore rupees, and in March 2021 it should be 354 crore rupees. Friends, the net profit of the company has also decreases due to interest income, which should be a constant like 3 crore rupees, which will be shown in the profit and loss account. Also, the tax provision is also decreases because of certain decrease in the EBIT. So the net profit is also affected 3.22% decrease in their previous quarter to quarter basis. Now we are focusing on the quarter balance sheet. Friends, the balance sheet shows that there is some dilution of the control, that is by improvising the share capital. From March 20 it should be 122 crore rupees, now it should be 134 crore rupees in March 2021. Friends, reserves and surplus has improvises 38.79%. That is from the 2994 crore rupees in December 2021 to 4891 crore rupees in March 2021. Now the other liability is also improvised up to 21.79%. Okay, and the fixed asset is increases 1.77%, that is 1827 in December 2021, and in March 2021 it should be 1860 rupees. Now we are focusing on the current asset. The current asset has improvised 37.20% quarter to quarter basis. That is, in December 2021, it should be a 2910 crore rupees. Now it should, in March 2021 it should be 4634 crore rupees. The current liability is also decreases 4.51%, that from December 2021 it should be 1775 crore to 1695 crore in March 2021. So we can see that the working capital, that is current asset minus current liability, which shows that there is working in. Now we are focusing on the annual result of the ESCORT Limited. Friends, we are comparing March 20 to March 20 and March 21 data. We are focusing on the profit and loss account first, and thereafter balance sheet. So profit and loss, first content is sales. Friends, the sales has been increases 20.72% from March 20 to 21, that is 5,810,000 crore rupees in March 20 to 7,014 crore rupees in March 21. The other income is also increases uh, rapidly, that is 64.95%, that is 97% in March 20 and 160 crore rupees in March 21. So total income is also increases 21.45% year by year. Total expenses is also increases 14.08%, and we are focusing on the EBIT for the decision making. It should improvise 81.65% from March 20 to March 21 year by year. Interest expenses is decreases. That means it shows that the long term borrowing should be reduced. So friends, the interest income is reduces 23.53%, that is 17 crore in March 21 to 13 crore in March 21. Net profit improves 84.75% in from year by year. Now we are focusing on the balance sheet. Friends, the balance sheet, the share capital is improvised uh, or is increased by March 20. It shows 122 crore. In March 21 it shows 134 crore. So there should be a dilution of the capital, okay, that is control. Reserves and surplus, friends, reserves and surplus has increased 63.36% from year by year. That is, in 2020 it should be 2,994 crore, and in 2021 it should be 4,891 crore. Friends, other liability is also improved from 122 crore in 2020 to 156 crore in 21. Friends, fixed asset should be increases 1.81%. Other asset is also increases from 277 crore in 2000 in March 2020 to 383 crore in March 2021. Friend, the working capital has increases 158.94%, that is March 20 it should be 1135 to 2939 crore rupees in March 2021. So friends, now we are uh, focusing on certain ratios. On the basis we can get a decision making. Okay, so the basic EPS, that is earning per share, should be increased 67.24%, that is in March 20 it should be 55.04 to 32.15 in March 21. Diluted EPS is also increases 67.11%. The book value of the company has been increased 46.32%, that is from 254.73 in March 20 to 372.71 in March 21. Dividend per share, dividend income is also increases 200%. Yeah, because in March 20 it should be paid 2.50 rupees as a dividend, and now it should be declared 7.50 rupees per share dividend in March 2021. So there should be a growth of the dividend income 200%. Also, the valuation ratio shows that the P ratio is increases slightly 13.98% in March 21 Earlier it should be 12.04%, 12.04. Okay. Now the growth ratio, the CAGR sales ratio shows that there is slightly decrease because of some COVID pandemic reason, and so it should show 17.75% in 2021 growth, and in previous year it should be 18.39 in March 2020. Friends, debt to equity ratio now it should be a nil, that is there is no borrowing in the balance sheet, long term borrowing in the balance sheet. The liquidity ratio is also improvised, that is it should be 1.64 in March 2020, and in March 2021 it should be 2.73. Now the return to earning ratio, we can find that return on net worth or equity it should be increases 17.33% in 2020 1 2021, and ROC, that is return on capital employed is increases 22.55%. Return on asset percent is 12.66%. So friends, there is no any so friends, annual basis we can say that the Escort Limited produces a good or better or best result. Okay. Now the shareholding we can focus on shareholding pattern. Friends, the promoter holding 36.59% in March 2021. In March 20, it should be 40.25%. So promoter share has been decreases, but FII and FPI, that is foreign institutional investors and foreign portfolio investors, have increased their holding from 23.79% in December quarter to 25.95% in March 21. So this is a deciding factor for the long term period. Now we are focusing on DII. DIS has slightly decreased their shareholding from December quarter. It should be 7.13% to 5.6% in March 21. Public has also slightly decreases their shareholding. So in December 20, it should be at 30.31%. In March 21, it should be 29.72%. Friends, 30 mutual schemes has invested in this stock. Mutual fund decreases their holding from 6.94% to 5.35% in March 21 quarter. Friends, now we are focusing on the technical scenario of the stocks. We are provided here monthly chart is provided. It shows that the moving average and technical indicators and all the moving average crossovers also shows a bullish pattern in the escort share. So friends, for the long term purpose it should create more value. Friends, it should be reached, the share price of the Escort Limited, it should be reached up to 1550, that is 1550, and it should be derived by way of certain brokerages recommendation. First, the Kotak Institutional Equities gives a rating of buy, and its target is 1700, but the view is cautious. Now second brokerage, Angel Broking, gives a buy rating and its target is 1573 rupees. It should gives a buy rating because of tractor market share is excess of 1%. 11%. So, in case of Axis Security, also maintain a buy rating and its target is 1,600 rupees because of moderate growth. In Escort Limited. ICICI Security gives hold rating and it decreases their share price target up to 1,140 rupees because of sharp increase in commodity price, that is raw material price has been increased 8 to 10%. Also there is cut in estimates of cut in EPS in financial year 22-23. So on that basis on we can predict that there is some cons and some pros for Escort Limited, and considering the above the target is 1550. Friends, we are request to provide a comment, subscribe our channel, and also click on the bell icon so for that you can get update from our side, and also try to the comment on the on which you want to the details. So friends, thank you, धन्यवाद, bye bye.